Hey everybody, Smart Silver Stacker here. Hope you're doing well. So the bull market in the precious metals appears to be alive and well. The metals are on the move again today. We've got the silver price back above $34. Last time I checked, it was up about 2% on the day. And maybe even more notably, earlier in the session, we had gold once again take out a record intraday high in the gold spot price. The gold spot price rose as high as $3,059. That took out the previous record of $3,057, which was hit back on March 20th. Notably, between March 20th and today, we actually saw a pullback in the metals, and we saw the gold price fall down very close to the $3,000 level. But the important thing is that the $3,000 level held, and it shows that that may be the new floor in the gold price. And at the very least, it is a region of strong support. Now, in terms of silver, in the most recent video on the channel, we covered the current technical setup in silver and why I believe that silver is poised to break above the $35 level for the first time in over a decade, a move that I believe will catalyze the next stage of this silver bull market and possibly could take us to new record all-time highs above $50 an ounce. Right now, we're less than $1 away from that critical $35 level. And in today's video, we're going to step back and we're not going to talk about the technicals too much today. Instead, what I want to cover are some of the fundamental factors that are contributing to the record all-time high in gold and to the significant gains in silver. And these are factors that are already having an impact on the precious metals market, but some of these factors may well be the catalyst that drives the metals in the next phase of this bull market. So let's get to it. Buy your gold and silver at SD Bullion. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. And yes, today gold is back over $3,050 an ounce. But the good news is that thanks to the folks over at Goldback Inc., we can now stack gold in increments as low as 1/2000th of an ounce. So really, no matter how high the gold price goes, nobody has to be priced out of this gold market. And you can pick up this 1/2 Goldback note and all of the rest of the denominations over at SD Bullion. So check them out. All right, so the first fundamental factor that I want to get into today, and this list that we'll cover today is by no means exhaustive. It's just some of the factors that I think should be on our radar as stackers. And the first factor is the looming war with Iran and the geopolitical instability that we currently find ourselves in. So last week, President Trump issued a nuclear ultimatum to the country of Iran. He said that they have 2 months to either come to the negotiating table or face military action. And we've already begun a military adventure over in Yemen with renewed bombing of the Houthi rebels. The president, in a post on Truth Social, has already effectively labeled them as a proxy of the Iranians and contributing to fears of escalation between the United States and Iran is an ongoing military buildup at the island of Diego Garcia, located in the Indian Ocean. And according to the most recent reports that I've seen, there are currently 7 B-2 Spirit stealth bombers being staged at Diego Garcia at the Air Force base there. This is within striking range of Iran. Now, keep in mind, there are 20 B-2 Spirit stealth bombers total in the U.S. military arsenal. Now, 7 of them are being moved to this island, along with a variety of support and refueling aircraft. And this buildup is far more than would be needed to deal with the Houthis. And this buildup suggests that the U.S. is, at the very least, preparing for a potential conflict with Iran at short notice. And I believe that this geopolitical escalation that we are currently witnessing is one of the primary factors that is currently driving the gold price to record all-time highs. And should a conflict break out, that will almost certainly light a fire under the safe haven assets of physical gold and silver bullion for a variety of factors. One, the Strait of Hormuz there in the Persian Gulf is likely to be closed by the Iranians. That will cause the price of oil to skyrocket, along with a number of other commodities. Just the general geopolitical risk that is entailed with a war with Iran will drive safe havens higher. And there is also the potential for the Iranian allies of Russia and China and the BRICS nations to accelerate their de-dollarization efforts as this conflict escalates. And if that's the case, what are they going to be getting into? Well, they're going to be buying gold, because if they fear U.S. sanctions and economic warfare, they're going to want assets without counterparty risk. And in this case, that means gold primarily. Now, I think this will be bullish for silver as well if this plays out. Of course, stackers, along with everybody else, will probably suffer from the economic degradation that will be involved in such a conflict, but at least in this case, the precious metals may offer an insulation for stackers against the worst economic effects. Now, let's move on to cause number 2 for the precious metals accelerating bull market and for a potential breakout moving forward. And that is this day, April 2nd, which has been labeled by the president as Liberation Day. This is a day that enhanced tariffs will go into effect with a variety of U.S. trading partners. Now, there's not a lot of clarity as to what will actually take place on April 2nd, this quote-unquote Liberation Day. And we've been seeing a lot of oscillations in the stock market as rumors of what will take place change. Trump will make an offhand comment about how the tariffs may be less severe than previously expected, how he might go a little easy on some of these countries, and we will see markets rally. And then, like yesterday, we heard of a 25% tariff on foreign manufactured autos, and we saw markets sell off. So it's likely that significant tariffs will be negative for the stock markets, but this could have a twofold effect on the precious metals. The first is that any tariffs on raw materials themselves, like gold or silver, steel, aluminum, copper, etc., suggest that domestic prices will rise as the cost to import these metals will go higher. The other effect is that any negative effect that these tariffs have on domestic stock markets means that we will see an enhanced likelihood of easing of monetary policy by the Federal Reserve to offer relief to these markets. And any rate cuts or quantitative easing, basically just money printing by the Federal Reserve, will likely drive the price of the metals significantly higher. President Trump has already made several comments about how he believes that the Federal Reserve should be cutting rates as the U.S. prepares to adjust to the tariffs. And if there is a downturn in the markets as a result of Liberation Day, it is very likely that the pressure on the Fed will become too much, and regardless of what happens with inflation, they will print more money, and that will be very positive for the gold price and the silver price. Factor number 3 is one that we have not covered on the channel yet, but it is very important, and I suggest you research this one on your own. However, this is something you're going to hear more about moving forward, I believe, and it's called the Mar-a-Lago Accords. Bloomberg and several other financial outlets have reported on this, and this is an idea that has been floated by Stephen Miram. He's the chairman of the U.S. Council of Economic Advisors, and basically what this will consist of, if it plays out, is a structured dollar devaluation. And this will be designed to enhance U.S. exports, because if we devalue our currency, it makes it easier to export things to other countries, which means more manufacturing domestically. And perhaps the most troubling aspect of this proposal is how foreign holders of U.S. debt will be held. And the idea is that existing U.S. debt instruments, treasury notes, bonds that are held by foreign entities will be replaced by long-term 100-year notes with low or no interest. And, we've talked about this on the channel before, about that this is how the U.S. debt crisis will ultimately be resolved. And my speculation in the past has been that what we'll do is the Treasury will simply issue a long-term, think 50 or 100-year note to the tune of the entire U.S. national debt with no interest attached to it, and the Federal Reserve will buy it, essentially monetizing the entire U.S. debt. And so when I read about this aspect of these Mar-a-Lago Accords, it immediately made me think that, well, this is the first time anybody has officially floated any kind of idea like this, and it's just one step closer to that resolution. But a structured U.S. dollar devaluation, as has been discussed here, will 100% lead to higher gold and silver prices, or at least as close to 100% as a forecast can be. And the fourth and final factor that I want to discuss today is one that I touched on in yesterday's video, and that is a potential end to silver price manipulation. If you haven't heard, Monday, March 31st is going to be Buy Silver Day. And the idea is that stackers get together and collectively buy silver bullion, trying to take as many ounces of this metal off the market as possible to stick it to the silver manipulators, to the bullion banks who have large naked short positions. Now, admittedly, this may be a bit of a long shot. However, it can't be ignored. And if I were a bank sitting on enormous volumes of naked paper shorts with no physical silver underlying them, the prospect of a squeeze in the physical silver market would cause me to lose some sleep. Now, when I posted that video yesterday, I received a lot of negative comments about how this won't do anything except spike premiums on retail silver bullion products and how this will only serve to enrich the dealers. Now, by the way, and on that note, I want to mention something that SD Bullion plans to do on March 31st. They're going to have a promotion where you can buy US junk silver coins at spot. I believe it's going to be a roll of dimes, so $5 face value. It will be limited to one per customer, but you'll be able at the very least on Monday to pick up some junk silver from SD Bullion at spot. So I don't think they're going to be making much money on that. And this is a gold coin that I recently picked up from SD Bullion right before the gold price rose above $3,000. And I'm glad I did, because this I picked up at spot as well. Now, the reason I mention that is sometimes, I have a sponsor on the channel. It's SD Bullion. It's where I buy my gold and silver. And a lot of times I get comments on these videos about how SD Bullion doesn't have the best prices. And look, no bullion dealer is ever going to have the absolute best prices on every single physical bullion product. However, the vast majority of the time, if you look at the deals tab at SD Bullion, they often have some great deals. And I was able to pick this up again at spot. So it's hard to beat that, especially on a pre-1933 gold coin that was minted in 1881, which appears to be in pretty good shape, by the way. But I just wanted to throw that out there to address those comments. Like, yes, 100% of bullion products are not always going to be the cheapest at SD Bullion, but if you take advantage of their deals, you can usually get a pretty good price. And on Monday, they're going to have that junk silver at spot. So I'll at the very least be picking up one of those rolls. Might do some additional stacking on Buy Silver Day as well. We'll have to wait and see what happens with the silver price and availability. However, this idea of stackers getting together and buying silver, I think really could potentially stick it to the banks who have these concentrated short positions. And a lot of those negative comments I got, it's like people think that these bullion banks who manipulate the price of silver are somehow omnipotent and like, oh, we can't do anything to them. We're just little stackers. We're just the little guy. But the reality is that physical silver is actually the Achilles heel of the manipulators, because they're not selling physical silver to drive the price down. They create paper out of nothing and sell that. And yeah, that is a powerful tool. The problem is that should the market get squeezed, they're borrowing something that they don't have and selling it into the market. They might end up in a situation where they actually have to go out and buy physical metal to cover that short position. If their margin losses exceed, what is allowable, you can actually get a short squeeze in silver. It's happened in other commodity markets. And if we break the stranglehold of the bullion banks who deliberately suppress the price of silver, again, not guaranteed, it's even probably a low probability event. However, it's worth noting because the significance of the outcome, if we actually pulled it off, would be so dramatic that it's sort of one of these low probability but huge gain type situations that I do believe it is worth noting. And it's also incredibly important to note when talking about this that ultimately price suppression must end. It is inevitable. It is economics 101. It is basic supply and demand. And the reason for that is that if you suppress the price of a critical commodity like silver, what you end up getting is shortages eventually. Now, we're not there yet. There's no silver shortage. But the scenario that we do find ourselves in is that for the past several years, every year, there has been a deficit in the silver market to the tune of more than 100 million ounces each year. And what that means is that more silver is being consumed every year than is being produced by both mining and recycling. So eventually, unless you get much higher prices to incentivize more production, that trend will lead to shortages and skyrocketing prices. And higher prices are the only solution. And today, because the cost of producing silver has risen so much because of inflation and all of the inputs that go into mining silver, the price would have to go much higher than it is today to incentivize enough production among miners to overcome the deficits. So look, I mean, price suppression, not only are the banks not omnipotent and able to suppress the price of silver indefinitely, but it is inevitable that price suppression of a critical commodity like silver come to an end at some point. And that date might be sooner rather than later, especially if enough stackers go out and buy metal. I mean, just think about this. If everybody in the US bought 1 ounce of silver, that would be almost a third of annual production of physical metal. So at today's prices, that's really not outside of the realm of possibilities, I don't think. I mean, we're not going to get everybody to buy an ounce of silver, but I'm going to be buying a lot more than that. And I just want to put that out there and kind of touch on some of those points to address those comments I've been receiving. But those factors are the ones that are at play here. The gold price is already breaking out to record all-time highs. I think it's only a matter of time before silver follows suit. But do me a favor and leave me a comment down below to let me know what you think about all of these factors. And if you enjoyed today's video, make sure you check out the video that's popping up on your screen right now. Thanks for watching, everybody. Stay safe and happy stacking. Smart Silver Stacker, out.